Hey, hello, folks. Welcome to Pro Trader Strategies. My name is Eric Wilkinson, and this is Spotting the Trade. I'm going to get you folks what you need to know before you roll, and that's going to be talking about the economic data, how that impacts the overall markets, maybe sprinkle in a little geopolitical fodder to round off that analysis, and then talk about some option strategies we could implement into our portfolio based on these assumptions we come up with in our analysis. So without further ado, let's get on with it. Economic data. This week, we've talked about it. Tomorrow is the real big day for economic data. We're going to be getting the flash PMI numbers. Those are the Purchasing Managers Index, very forward-looking data points there. So we're going to be keeping our eyes out for that because that's going to be a real driver of the markets, because purchasing managers, we would expect them to see the demand coming into the manufacturing sector. Then they ramp up the buying of the raw materials that goes into the manufacturing based on that. Now, if we start seeing a pullback, they're going to be pulling back on their advanced purchases for those forward sales. So with that said, let's get on with today's economic data. We got the Purchasing Managers, PPI, which is Producer Price Index. This is before we see it passed on to the consumer. So in Great Britain, we got the input was a little bit higher than expected at 2.1%, expected to be 1.8%. They did revise last month's numbers up as well, quite dramatically by 1.6%, folks. Yes, I said that right. Raised it by 1.6%. That's on the inputs prices coming into the manufacturing, spiking to 2.7%. We expected it to be 1.1, came out 2.7. All right, enough said about that. That's the revision. Headline number 2.1%, still higher than expected. But with that revision, really going to cause some pain at these companies because their inputs are much higher than their outputs, because the outputs came in line with expectations at 1.6%. So the inputs are more expensive than what they are able to pass on to you and I as the consumer. Then we got the Consumer Price Index out of Great Britain that came in at 9.1%. So not really seeing it getting passed on to the consumer, especially when we look at the core Consumer Price Index, which is going to strip out like food, energy, alcohol. That comes in at 5.6%, expected to be 6%. So a miss on that to the downside. So really, the consumer is not willing to accept these higher prices. So the manufacturers are obviously the ones that are caught holding the bag here. As a matter of fact, I tweeted out something earlier today when we're talking about all these prices and everything else. One of the things with the government is look at the road drops when you're driving down the road and you're looking at the construction going on there. Those folks probably bid this job a year ago, okay, based on a year ago's prices. Yeah, the smart ones, what do? They add in a little inflation, but where's inflation been recently in the past 5 years or so? They're adding in that kind of inflation. They're not adding in inflation on things like PVC pipe, where it's up over 110% year over year, folks. You cannot price that in anywhere. So folks that are dealing in PVC are working with PVC are having to purchase these prices twice as expensive as what they were expecting. Yeah, maybe they had a 30% profit margin in there with 10% increase for interest. They're still paying to put pipe in the ground, okay, or into a building or anything else. That goes for copper as well. Copper's way up. So there's no way that these folks, even when they embedded their profit in there, that they're making profits going forward here. So major problem we're going to be seeing, because that's especially an increase in price that is not able to be offset by a consumer or a customer. Okay, so because those bids are locked in, those prices are what is expected. So a lot of people having a lot of pain in the manufacturing sector, at least, for lack of a better thing. And later on today, we do get our flash PMI numbers a little bit earlier than what we get out of Europe. And that's because we get our manufacturers and service sectors tomorrow. I don't know why. Oh, I'm sorry. That is Japan's gets their PMI. So everybody's getting their flash PMI estimates coming in tonight and going into tomorrow. So it could be very busy, despite the fact that there is a bank holiday, but it's just for somebody like, I think it's New Zealand. So that's not going to affect us. And then Friday we get University of Michigan and new home sales. So keep your eyes out for that. Michigan expectations, everybody's going to be looking for the 5-year expectations now. We never even used to talk about the University of Michigan expectations that far out, but it is probably going to be something you're going to be hearing more about going forward. All right, so with that said, I guess I got to share my screen here. It's not sharing, it doesn't seem like. Let me get over to there. There we go. All right, so bonds I'm starting out with here just for the levers and pulleys seem to be working here in the markets finally, as we're starting to see a little bit of push here to the upside. One thing I wanted to talk about, and this is with the bonds. Bonds are starting to rally. I've talked about this. Covered calls is something we should be very concerned about right now for our bond portfolio. Yeah, prices are going up. Our bonds looking pretty good, but we need to be diligent with covered calls because the expectation is, folks, that there's another 75 baked into the cake, which means that bonds really don't have a whole lot of room to the upside here. Why? Because we talk about this all the time with pricing. Let's say with pricing, let's see, hopefully that works out if I do that. No, it's not going to work there. So let's go to the pen. All right, so as bond prices goes higher, right, we're talking about pricing, then we see interest rates going down. They're inversely correlated. It's like a teeter-totter, folks. Really easy way to think about it. So we are starting to make this move to the upside. Interest rates are going down. Yes, your portfolio is looking good, but this is the opportunity to do those covered calls there. Then we got, I don't know if that worked. I got to go to, been a while, folks. All right, so let's go over here to crude oil. That's what I wanted to talk about anyway. Something to talk about here. We got a big pullback here. Looks like we're going to be testing 100. I was talking about, hey, yesterday settled above the 50-day simple moving average. Looked like we were kind of trying to find a bottom with that indecision right above that area. Well, today we got a drop. Why is the price of crude oil dropping overnight? Well, it looks like the national gas tax for the federal government's being lifted. That's a whopping 18 cents, folks, off of your $5 a gallon of gas. Well, that's making this market come off a little bit. The thing is, folks, it's going to make it easier for you and I to buy. We're going to save a couple of bucks a tank here, but demand isn't going to be eased here. This is a product of lowering price to get folks to drive that demand and increase prices. I don't think that all of this coordination is really uncoordinated, if you will. It seems very planned, and these prices are hurting the folks in the middle the most. All right, folks that are extremely wealthy, they're not really going to have a tough time filling up the gas tank. They're not even going to notice this 18 cents a gallon coming off of premium gas. All right, so those folks aren't going to really have to worry too much. But for folks, middle America, this is what's going to put the pinch on us and cause a lot of problems. Another thing we're talking about, strengthen the dollar, causing this to come down. I don't think that that's really what this is all about. It's just a blip for the downside. We need to see increasing production to really get anything going here. Then gold futures, we can take a look at them. They're really kind of winding down or winding up, I should say, in this tight little market. They're going to snap one way or the other. I would risk is to the upside here in gold futures because of this winding up we talk about. The longer you stay in one area, it's like the propeller on an airplane, a balsa wood airplane, where you're winding up that rubber band. It's getting tighter and tighter and tighter. The more you wind it up, like these markets here, the faster that's going to unravel and snap to one direction or the other. We're going to see that same type of action here in gold futures there. Another thing to talk about is Bitcoin has been having a real tough time during this whole market turmoil here, testing below 20,000. Folks, our line in the sand down there is 18,000. I think it was 18,250-ish. That's going to be where we're looking for as support. A lot of folks are talking about the psychological level right around 20,000. That's going to really exacerbate some of the panic selling. If we go below that, I'm not going to lie, just because it's psychological, I think that we could easily see something like that happen. Now, if we get over to the E-mini S&Ps here, for some reason I'm blanking out. E-mini S&Ps right now, futures overnight are indicating that the market is going to be engulfing pretty much the previous day's move. That means that we have that day of indecision. Market could go higher, but the expectation here is that we are going to see the markets in a continuation pattern. Anytime you get that engulfing, it's going to want to continue in that direction going forward. So let's take a look at the breakdown here of the E-mini S&Ps. I don't have the overnights here colored, but you can kind of see these are the overnight sessions. I'll have to make an adjustment there. I'm not really loving the way this chart's looking, but you can see overnight is pretty bearish here in the E-mini S&Ps. And then we can go over to the NASDAQ. Let's go to the NASDAQ, and then we'll check out the Dow Jones Industrial Average. All of these markets looking very similar. So risk, again, still to the downside here. I don't feel like the pain has been put in there. We have not seen really any type of panic. This is a nice build out of a bottom here when we get the indecision and then the market starts slowly rebounding. So these are the types. I do like the way the market is acting with this bearish move. We're getting some consolidation, a little bit of a rally, pullback, consolidation. That is a healthier bearish market than these snaps that we've had in the past to different levels and trying to get these V-shaped recoveries and things like that. So we are going to see a little bit more to the downside, I believe, going forward here in the equities. So with that said, I think I've covered just about everything I wanted to cover. Risk is to the downside. Anytime we get in these pops, today might be the day to start to look to cover calls because we have high implied volatility across the board. I talk about that in these videos that I'm doing, so please check them out. These are the spotting the trades, so you're going to need to make sure you subscribe with the bell because those are unannounced, but the rest of them, you can subscribe to our YouTube channel. We are also on Facebook. Facebook, I believe, might be a little bit easier to comment. Just throw a Y over there if you've got the ability to comment for me. I'll make sure that if you guys have any other comments, I'm going to circle back around and make sure everybody is clear of concept before going. Hey, there you go. There's a great, why is silver falling yesterday? That's a great question. You know, it's in line with what we're seeing with the gold. The levers and pulleys of the markets with these metals are falling right now. And you know, some folks are calling it due to the higher dollar. I don't think that's really it. It feels like right now, folks are just doing a cash grab, putting money in their pillowcases or under their beds, things like that, to store that value. Now, that means that they are willing to lose to inflation, right? If you have $1 today, tomorrow it's going to be worth less due to that inflation because its buying power has dropped dramatically. Well, think about what that's saying about the markets. They're doing a cash grab. They don't even want to put money anywhere, and they would rather lose that money to inflation because it's less than what they're believing is going to happen in the overall markets. And listen, I get what they're saying. As a matter of fact, you folks might be thinking about the same thing. When we were having a great economy right before the pandemic, right? The economy was doing really well. Pandemic really shut us down. Well, think about that. Since the pandemic recovery, we have eclipsed that level and probably doubled almost in valuations going forward. Now we've pulled back and we've had a 20% pullback. Folks are clamoring that the market has crashed. Well, crashed to pre-pandemic levels, folks. So does it seem like it's that far out of the realm of possibility that we could have a further correction because the economy is not doing as well as pre-pandemic? Quite possibly, folks. So that's where a lot of people are worried and putting money to cash. So I believe that that's what we're seeing. Investors aren't really too interested in investing anywhere because I've been talking for quite some time. Gold should be going higher. Silver should be going higher. And if you are really a believer in Bitcoin as a retainer of value or the next currency going forward, then that's where I would think people would start to park money. We're not seeing that right now. As a matter of fact, during the crypto currency convention down in Miami, we were seeing these sell-offs happen going into that. Yeah, a lot of those guys are going in there and using money to try and support this levels. But at the end of the day, the ones that are supporting the markets are usually the ones that are going to be caught holding the bags here, all right, because they're catching a falling knife. All right, that's all I got. Thanks, Johnson, for asking the question. Make sure you guys subscribe, like, comment. I'll circle back around to make sure everybody's clear of concept. Okay, folks? All right. Take care. Have a good day. And if you can't take that, take it easy.